As we're about to start, I just want to say that this is more or less like a chat between us as investors. Looking at the Google form we filled, more than 90% of us here are beginners, or we've not invested at all. So for us, we are completely beginners. So there's a need for us to start from scratch. Um, so as I'm going, whenever there's a need be for us to have questions and answers, or let me say when we are moving from one stage to the other, there can be questions and we just use some 3 or 5 minutes to address the questions, then we'll move to the next stage. I'm hoping that by 1 hour 30 minutes, like 2 hours, we should finish this particular meeting. Yeah, but please kindly stay with us. If you don't stay from the beginning to the end, you may not get everything wholly. So I believe that once you are here, even if you don't have data, please kindly borrow data so that we can go through it, and at the end of the day, everybody will benefit. Yeah, and please feel free to ask any question. I'm just a young guy. I'm just a small boy. So after this, we have a landing page. That's where the WhatsApp page is. If you have any question, you can put it on. Even if I'm not available, some other people too that were able to join us in our first class, they understood everything, so they can also attend to you. But for the sake of this meeting, you can put any question you have here and it shall be addressed. Alright, so let's get into it. And like I said, we are all here to learn and relearn. So if I happens to say something that you have a different view, please don't hesitate, just bring it up. Or if you have a diverse view, just bring it up so that we can all judge and have a conclusive discussion on it. So like I said, from the data, over 90% of us here are beginners. So if I'm to say, I'll be like, I'm just starting the class like that. I'll be like, before you invest in anything as a person or as an individual, there's a need for you to assess yourself. Every individual has his level of attitude when it comes to risk, or we have different type of people when it comes to risk and everything. We all know that wherever there's profit, there is losses. There cannot always be profit. Sometimes there are losses. So you need to assess yourself. And in finance or investing, we have 4 categories of people. We have some people that they are risk averse. For them, they don't like risk at all. And some people are risk neutral. For them, they are neutral when it comes to taking risk. That is, they are come see come ça. And there are some other people too who are very risk lovers. For them, they are comfortable taking risk, and anything that you see, and they feel like there's sense in it, and they do their due diligence and realize that there are some things that when you put in their money, they'll be able to benefit, and they love it. And those people, we call them risk lovers. And we have some people that we call risk aggressive people. So for them, they'll do everything possible to get rich, and they will take any risk in order to get there. If they don't mind having 1,000 Ghana cedis, and you tell them that, okay, if you put your 1,000 Ghana cedis in this particular thing, tomorrow you get 2,000, Charlie, they will jump into it. So as individuals here, I want us to assess our please kindly mute your mic if you are. Please, sorry about that. Please, once you put on your mic, it distracts the process, or it distracts the entire meeting. So please, if I'm talking and you want to talk, please just put on your hand, and maybe I will just give you an opportunity for you to also talk, so that we can have a smooth discussion. So like I was saying, each and every individual here, we all have the level in which we can take risk. So we need to assess ourselves here and know the kind of people that we are. So that at the end of the day, you don't go and get into something that you are not supposed to get into. So that is the first point I have to make. Assess yourself and know the type of investment that you can do. So if you are somebody who is a risk neutral person, you don't like taking risks. So for you, what you should be doing is for you to be investing in something like fixed deposit, invest in treasury bills. Those are some of the things that you can do. And we have other people too who are risk neutral. So for them, they can invest in bonds, they can invest in mutual funds and different other things. And some people are risk lovers. So for risk lovers, you can invest in stocks because the stock market moves ups and downs. And also, if you are a risk aggressive person, you can also go into something with high volatility, that is crypto and different other things. But for the sake of this particular discussion, I want to let you know that investing is a boring game. If you are here with the mindset that if you start investing, oh please, there is no slide to this particular meeting. I didn't prepare slides, but I'm recording it. After everything, I will put it out there so that you can also benefit. So for the sake of this or let me say this journey, you need to understand that investing is a boring game. You can't start investing today and tomorrow you become rich. It doesn't work like that. If you want to invest or if you want to go into investing, then you must have patience. Secondly, you also need to know that it's not a get rich quick scheme. If you start investing, just know that once you are there, it's not something like men's gold or qnet, or it's not like we all know the Ponzi schemes. Investing is something that you need patience, and it's something that you need to go through the process. And in investing, if you make your mindset that you are coming to invest, I will advise that whenever you thank you, Michael. I will advise that whenever you receive your salary, you must divide them into three. We have 50, 30, 20 rule. Please, sir, can mute your mic. Please, some people are complaining the network. Please, is it that? Okay. I think that's a discussion group.
Oh, I can hear you perfectly clear, so I'm sure it's the network.
All right. So what you need to understand is that if you are a salary earner or you are having a business, at the end of the month, divide your money into three. We have 50, 30, 20 rule, and that is the most important rule we have in investing. The 50% go to your basic necessities, that is clothing, food, shelter, and any other thing that keeps you moving as an individual. The 20 goes to something that makes you a human, or something that puts you in a upper pedestal. So let's say you want to buy books, you want to go out with friends for entertainment, you want to give somebody money. It comes from that of the 20% of the money, and the 30% of the money, and the last 20%, that is where our focus will be, and that is the investing part. And in every human life, or if you are in this world, there are three ways of making money. We call it three golden rules or three laws of money. The first rule is the rule of value, or the law of value. You see, if you want to become a different person, or if you want to build generational wealth, you must have two things. It's either you are offering a product or you are offering a service. I don't know whether you guys are getting me. The product can come in a form of, maybe you've developed an idea, you are selling goods and services. That is, maybe you are selling, you've developed a business and you are selling something. That is a product. Or you have a company and you are offering a service to different people. That is it. Or the other hand, you can also be offering service. So if you go to school, you become a medical doctor and you are helping people treat them and they pay you. That is a service you are offering. In that particular chain, that is the value chain. You are offering something in order to get paid. But the latter, that is the service, it also comes in different ways. When we have something we call product and service. The service can actually be maybe you rendering service for different people, and also the skill or technical aspect of service. But the technical aspect of service is like an infant. Let's say your mother has given birth to you, and during the birth they are breastfeeding you. You see, you cannot keep breastfeeding forever and ever. It will get to a point in time that you must stop breastfeeding, or they must stop breastfeeding you for you to face the world. But that particular process of breastfeeding actually builds you to become who you are to face the world. So that is more or less like a salary. So if you are here and you are a salary earner, you must understand that you can't keep earning salary if you actually want to build generational wealth forever. There will be a situation or a time where you just have to use that particular money that you are getting from whatever income or whatever job that you are having to build yourself and build generational wealth. So that is the first rule of law. And the second rule of law also comes with the rule of, or the law of sales. In order to get anything done, you must sell. If you have products, let's say you are here and you are having a business, you've imported, let's say, goods from China, you've buy goods, you have stocks in your warehouse. At the end of the day, it doesn't have mouth to sell itself, or it cannot sell itself. You have to sell the products in order to gain something we call cash, or there have to be something we call cash flow. Money will move in and out of your business. So you must learn sales. And the last rule of law is the rule of investing. If you take a look at all the rich people that we have in the world, I mean, when I'm talking of riches, I'm not talking about people who just get maybe one house and a car, and at the end of the day they are living comfortable. That is fine. Everybody defines riches by their own standards. But when we take a look at the top, let's say 100 or 1% of people in the entire world, almost all of them, one way or the other, build their riches or their wealth through investing. So you make money through providing the service or the product that you are having, and it transitions for you to sell. And once you sell and you get money, at some point you must invest in different things. I don't know if you are here, maybe one way or the other, you've heard that if you actually want to live a free life, then you must build your life to an extent that you don't have to work and you earn. You have to sleep once you are earning. So that is the third rule of law. You just have to build your life to an extent that whether you are working actively or not actively, you are gaining something. And that particular means comes through different ways of investing. So today I want us to take a look at different types of investment that we can go into, particularly we those in Ghana, and not limited to Ghana, because across the world these are some of the investment or top investment that you can actually go into, and it will help you. But the highest level of it, or the reason why most of us join this particular meeting, is because of stock investment. But it's not going to be limited to only stock investment, because each and every individual here, we all have our level of income. Some people are here, they earn just 1,000 Ghana cedis or little above 1,000. Others earn a little above 5,000, or within the range of 5,000. Whilst others also earn above 5 figures. So everybody has their level of income and the kind of investment they may get into, or the kind of diversification they may get into. Yeah. So I think this is just the first part. If you have maybe some 2-3 questions, I can just address it so that we go into the main topic of the day, so that we can judge and see the investment that we are talking about, and we'll all move on. So please, if you have something to say, just okay, just raise your hand so that I can give you the opportunity. Joseph Foley, please, you have something to say.
Yeah, boss. Thank you very much. I'm enjoying the presentation. But you made mention of, the three types of ways of making money, and I want to find out where network marketing falls under, because you were referring to a particular company that I know of, like Yonet. You said it's like a Ponzi scheme, but I know it to be a network marketing company, which is also not a get rich quick scheme. It actually take years for you to make money, and they basically sell products and services. So what's the difference between this network marketing and investment that we are talking about here? Thank you.
Joseph, honestly, I will not lie to you. For what the society has sold to us is that QNet is more or less like a Ponzi scheme. They'll promise you that bring one person and the other person will also bring another person and the person will bring somebody. So what we know outside the company is that unless they do proper branding so that we understand what they are into. But for the sake of the question you asked, marketing falls under sales. And you cannot market anything if you don't have something to sell. You need to have something before you can market. I don't know whether you get what I'm trying to say. And fully,
I get you. So
yeah.
product and services.
Product and services, that's the first rule or the first law of money. You need to build either product or service. So
All right, thank you.
let's say you are here and you are selling, let's say, physical product. That is a way of making money. And somebody is also here, he's having the technical know-how, let's say consultancy, or let's say you write CVs for people, or you can code. Those are not physical products, but you are offering service to somebody. I don't know whether you get
Uh,
what I'm trying to say.
I get you.
Yes. Please, Michael, Ferdinand,
Yes, boss. Yeah,
please.
it's the 50/30/20 rule.
All
Yeah,
right.
I heard of the 50, which you said for the basic needs, and the 20 for the investment. I didn't get a 30.
All right. So I said 50. If you are here and you earn any money, or maybe you earn money at any point in time, the most important thing is for you to reserve some of it. And the most popular way of investing, that's not the only way of investing, is one of them is 50/30/20, and the 50 goes to your basic needs: food, shelter, clothing, any other thing that keeps you going as an individual. The 30 goes into that of something that makes you human or brings you value or just blend you among the society. So it can be entertainment, let's say buying courses to learn, or gifting somebody's money, any other thing that makes you a human. And the last is the 20. So the 20, you can invest it in any other thing. We have other theories or other ways of investing. You can actually develop any idea or any way uh, that at the end of the day you'll be able to benefit. But you should know that once you are investing, you shouldn't use all your money to invest. That's the other disadvantage of investing. If you are somebody who earns money and at the end of the day you divide your money into two, or you put 80% of your earnings into investing and the 20%, you realize that you struggle. At some point in time there will be emergency. At some point in time there will be some things that you have to do in life. So you shouldn't put everything. Investing is a long term journey. It doesn't happen only one day. So that is just the basic understanding of it, the 50/30 rule. Ferdinand, I don't know whether your question is also answered.
Thank you very much. Thank you very much. Thank you very much.
Uh, please, Stephen Dua Jr., please, if you have, I think that's the last question so that we just move on. Please, Stephen,
Yeah, yeah, boss. I think Steven Sound has been up since the beginning of the program. So I
uh,
don't know if it's a mistake or no intentional.
All
How
right.
I'll be answering them.
All right. Thank you. Zulaiha, please come in with your question.
Please, good evening.
Yes, please. Good evening.
Please, I want to ask, like, if you don't have any strong income, should we learn how to invest?
All right. Please, that is a very wonderful question. Um, so the basic understanding is that knowledge is power, or at every point in time you must seek knowledge. It's good for you to have investment knowledge, but if you don't have the money to invest, please find something that will bring you income before you start investing. But
Okay.
before you invest, please make sure that you have the knowledge before you invest. Don't invest blindly. Learn how to invest before you invest. But the basic point is that before you start investing, you need to have a job. You need to have maybe a skill that brings you money, or bring anything, or have anything that you earn, and put part of the 20% of your earnings to that of investing. All right. So thank you very much.
Okay.
So please, uh, I think we can uh, move on. So if you have a question, probably you can put it in the chat box so that the next full of question will just take it. So let's get right into it. So the basic investment I will just want us to look at will be mutual fund. We'll look at treasury
Hello,
bill.
boss. Boss, it's a quick one.
All right.
Hello, boss. Yes, I
Yes.
think you can use the host control to lower all hands so that if Stephen's mistake, like answer is a mistake, so it can be lowered. So you don't have to come back to it. The subsequent question.
We should use Control T to lower all hands.
Yeah, you can use the host control too. I think he has even lowered his hand now. So it's fine.
All right. Thank you.
Sorry for that.
All right. So, like I was saying, mutual fund, we'll look at it. We'll look at the second, treasury bill. Third, we'll also look uh, at maybe bonds. And last, we'll look at the stocks. So, we'll look at four. But if you also have anything that you want to ask a question on, either crypto, either real estate, either ETFs. Okay, so we can replace bond with ETFs and look at ETFs. So we'll look at mutual fund, treasury bill, ETF, and also stocks. But with all this, I will just explain it and I will take questions on it, and how to put, or the basic step-by-step process to also uh, set up your account and do everything. If there's time, we'll go through it. If there's no time, I will leave a link so that you can access it and know how to set up an account and go into it. So the first one, like I said, we'll look at mutual fund. So in Ghana, we have different types of mutual funds, and even in the Western world, any part of the world, there are mutual funds. And the basic concept about mutual fund is two or three people coming together to give their money to one particular fund manager or somebody. Let me put it in a plain language. Two or three people, let's say Abdul Fattah, Safian, Basit, Joseph, Ferdinand, coming together to give their money to somebody to invest it, and at the end of the day, they all benefit from that particular investment. With that, we call it mutual fund. And the person in which they give the money to is called a fund manager. So let's assume that I'm the fund manager and we all in this community has agreed and contribute the money to us. And at the end of the day, I also goes into, I look at the market, and because I have knowledge or I have some expertise in investing, I invest it in that of something that brings in returns. And the something that brings in returns mostly can be treasury bills, it can be stocks. Those are some of the things that fund managers invest money in. We have money market mutual fund, they invest in stocks, treasury bills, bonds, like anything that yield returns. And at the end of the day, returns that comes in from this particular investment, they divide it based on the percentage of money or the amount of money you've contributed. You divide it in percentages and everybody will benefit. So that is a basic idea about mutual fund. And mostly if you take a look at it, it's run by investment firms. Mutual fund is run by investment firms. And the income or the returns that comes into it in Ghana mostly is about 18 to 20, or mostly 20, and sometimes let's say 25. So let's say if you have 10,000 Ghana cedis at the beginning of the year, we are just entering into 2026, and you feel like this particular 10,000 Ghana cedis that I have, I won't be needing it for a while. There's a need for you to put it somewhere, and one of the things you can put it on is the mutual fund. And somebody may ask, what is the level of risk when it comes to that of the mutual fund? So like I established, the 10,000 Ghana cedis with, let's say if you invest and you are getting 20%, that is fair enough. At least by the close of the year, instead of 10,000 Ghana cedis, that would have been sitting in your mobile money, and they will still, and you will not get enough interest on it. Probably they will just give you some 100 Ghana cedis and you will even be happy. Or you will even, they will, if it's in your bank account, they will even deduct service charges, and the 10,000 will even reduce to 9,000 and something Ghana cedis. But if you put that in that of a mutual fund, the 20% will get you like 2,000 Ghana cedis on that of your money. I don't know whether we are getting it. So that is the basic concept. With that, you're making some money in that of the mutual fund. And the risk aspect of it is that if you take a look at mutual fund, mostly in our part of the country, there hasn't been much risk associated with mutual fund. It's more or less like a risk neutral investment. Even though it's prone to risks, but where we sit over the last 5 years to 10 years, there hasn't been any mutual fund that is well established, and at the end of the day they make some losses. Mostly they perform because there are competitions in the market, and every mutual fund is trying to yield or bring out the best for their clients. And the types of mutual funds or the mutual funds we have in Ghana, and you can also take a look at it after this our discussion, where I'll even share some of the mutual funds, maybe related mutual funds to you. Is that firstly we have data bank M fund. Yes, it's the data bank. The data bank, they have an M fund. We also have Stanbic Income Trust Fund. It's also a mutual fund. We have Stanbic Cash Trust Fund. It's also a mutual fund. Aside these two, we have IC Liquidity Fund, where most of us here are familiar to. But if you are not IC, we have IC Liquidity Fund, which is also a mutual fund. We have Achieved by Petra. They also have a mutual fund, and that particular mutual fund, they call it DigiSafe. It's also a mutual fund. So these are just some types of mutual funds that we have in Ghana. So these are the basic categories of mutual fund. Let me take it again. It's a contribution where two or more people comes together to give it to somebody who is qualified to be a fund manager. At the end of the day, the fund manager take it to something that will brings in returns. And when the returns comes in, they divide it based on the percentage of contribution. As simple as ABCD. And in Ghana, there are mutual funds, different types of mutual funds, like I mentioned, and the returns mostly ranges from that of 18 to 20%, and extremely sometimes they can go as far as 25 if the market condition is good. Like this year, we've seen that the new government that came in, they've been able to perform. Interest rate went down, inflation rate went down, monetary policy also went down. Charlie, Aban Papa, like everybody is enjoying. So the market condition is good. So this year, this year it's more or less like some of the mutual funds has performed. So if the market condition is good and there are performances, you realize that the money the fund manager will brings in will be that perfect. So that is the first investment option that I would just want us to look at. The second will be treasury bill. Treasury bill. So the basic concept of treasury bill too is that is a lending to the government. It's a lending to the government. So we all here will agree that the central government, that is the government of Ghana, and if you are here and you are not from Ghana, let's say if you are from Nigeria, the Central Bank of Nigeria, if you are from US, the federal government of United States, every state, they borrow money. Even US, mostly we cry that Ghana, our government borrow money. Even United States, they also borrows money, and their debt and kasa is even bigger than that of Ghana. So every country they borrow money, and the central government mostly they have short-term lending and they have long-term lending. And the short-term lending is what we call the treasury bill. With that, they lend it from that of individuals or citizens. So they open up a bid, and people who have money will come in, and they will bid or they will give their money to that of the central government. So let's say Ferdinand has 1,000 Ghana cedis, and he feel like within 3 months he will not be spending the 1,000 Ghana cedis, and he also knows that uh, once he leave it in his bank account, his girlfriend will call him that, oh baby, there's Zamadisco, I want us to go, and he'll be tempted to give the 1,000 Ghana to the girlfriend to maybe buy some ticket and also polish herself for them to attend that of the jam. So he also look at that, okay, let me, instead of me leaving it there and there will be temptation, let me put it somewhere. So where will I put it? So treasury bill may be the right option for you. I don't know whether you get what I'm trying to say. And it has different categories or different classes. You are lending it to the government. It can be 3 months, it can be 6 months, and also it can be one solid year. It doesn't go above 1 year. And mostly these particular ranges, it all comes with their own interest rate. When I talk about interest rate, it's all about the amount of money you are making as an individual. I'm sorry if I'm using technical terms because most of us here we are beginners. But when I'm talking about interest rate, is if you put your money in something, how much are you gaining in return? That is the interest you are gaining on something. I don't know whether we are getting what I'm trying to say. So if you take a look at treasury bill, types of there are three types of interest on it, and it depends on that of the number. Sorry, I was recording it. I think I made a mistake. The recording ended. So let me just record it again, then we'll continue. So like I was saying, Zulaya is having a business, and she has been moving or managing the business for like 5 solid years, and she has gotten to a point in time she realized that she need to go international or she need to go national. Let's say she's in one particular region. Let's say she's in Brown Afo region or she's in Ashanti northern region, and she now wants to diversify her business, and some will go into different regions, or she wants to move to the national capital. But the only limitation she's having is that she doesn't have money. Like there's not enough money for her to move out there like that. I don't know whether we are getting what I'm trying to say. She doesn't have enough resources to move out there. So she now comes in, and instead of her to just uh, stay at the point she is, she has a wider mind, or there's a platform for her in order for her to grow. And once may all of us here may testify to the fact that if you are running a business and it goes to a point in time that you need money, the basic way of making money or getting money is through loan. Is going to the bank to get loan. That is one of the fastest way to get money, because she now has a business. The business may have assets, and she can use it as a collateral to take loan. In business we call it debt financing. Getting loan from a bank to finance a business is debt financing. However, there is another way in which Zulaiha can finance a business without taking a loan, and that particular way is called equity financing. Equity financing. So here Zulaiha is now going to take the latter, that is the equity financing. She doesn't want to take loan because at the end of the day, loans comes with high interest. Some loan interest may go as high as 20 something, some may go 30. because the bank giving you the loan, they are afraid, they don't know whether at the end of the day they will be able to recover the loan. So the interest in which they are putting on the loan is very high. And you can testify to the fact that as a startup or as a business, getting up and you are already taking high interest loans, it will handicap your earnings. At the end of the day, you're making some money, and the returns you've gotten, you are paying 30% of it as interest to somebody because you've taken loan, and it's going to continue like 4 or 5 years. You realize that it's not good for the business. So there's a platform in which Zulaiha can now go to take that of people's money in order to invest in that of a business, and that particular platform is the stock exchange market. So we have stock exchanges across the entire world. Most countries have stock exchange markets. So the market is just the regular market like we know, but it's not open to everybody. It's only a market where companies comes in to take resources from individuals, and those resources, the people who takes it invest in their businesses, and at the end of the day, the profit that these businesses make from that of the money they've taken, they pay something we call dividends, and also if the business also grow, there's something we call capital gains that each and every individual benefit. So there's a meeting point where there's a market where a meeting point where investors, so all of us here, we are assuming that we are investors, we have money, then we are out there looking for people that we can trust their business and put our money into. At the end of the day, if their business perform, we benefit from it. And there are some businesses also out there who are also looking for investors to invest in their business, and at the end of the day, they are willing to share their profit with those investors. So that is where the stock market comes in. So it's an intermediary, or it's just like an exchange where investors come, and also where businesses come for there to be an exchange. I don't know whether we are getting what I'm trying to say. If like you are here looking at how I'm throwing my hands, like you laugh at me, but like it's just an exchange where people, businesses and individuals comes in. So that is just the basic idea about the stock exchange market. But it's not every business that can go into the stock exchange market, because like somebody can be there and all of a sudden he will develop a solid idea. You know, some people are very good at idea, like bringing an idea up. So let's say if Safian is there, Safian has a solid brain. Like Safian is a very good person. Like he is very good at strategies. He has been able to strategize his company, an idea, and send it to the Ghana Stock Exchange market. At the end of the day, he will extort people, and maybe he doesn't have a real motive behind that of his idea. He may extort people. So it's not everybody it's not every business that is allowed in the stock exchange market. So before your business will be allowed in the stock exchange market, it has to go through some requirement or regulatory requirement. I don't know how many hours have we done. I'm sure we are less than an hour, but in some time we will catch up and we'll just finish very soon. So if you want to put your business in the stock exchange market, and individuals like us will come and invest in the business, firstly you must go through the requirements, and some of the requirements are that first, if your business is a private owned business, like Zulaiha was running a business, it was a sole proprietorship. She first of all need to change the business from sole proprietorship to a company, and from a company she will have to change it to a public company before she can list it in the stock exchange market. So it's not every business that is allowed, and the business, before they will even allow it, you must meet some certain capital threshold. You must have some amount of money as a business before they will allow you in that of the business. I don't know, and there are some regulations. We can read more about that in that of the stock exchange requirements. Each and every country has their own regulations when it comes to admitting businesses in the stock exchange market. But the basic concept is that if you are going to list your business, you must be a public company before you list your company in the stock exchange market. MTN Ghana before 2018 wasn't a public limited liability company. They have to change the company to a public company before they can list the company in the Ghana Stock Exchange market. So that is just the basic understanding behind the stock exchange. But there are some requirements, like I said, and one of them too is IPOs. I think as beginner investors, we must understand IPO and IPO, because throughout your investment journey, you hear IPO, IPO, IPO. The IPO is simple: initial public offer. Initial public offer. If you are here, you can be taking notes. You may need it later. Initial public offer. So the initial public offer, if a business is now coming to that of the stock exchange market, they are expected to sell their shares to individuals before they will then put them on the platform, or they will put them on that of the stock exchange. And these particular IPOs are usually done by syndicates. It can be sold by a brokerage firm, or maybe it can be sold by a bank, or it can be anywhere where people can buy the shares. So when you are going to put your business there has to be a valuation. They will need to quantify your business to know what is the actual value of your business. So if Zulaiha business worth 70 million Ghana cedis, she need to bring accountants, or she need to bring experts to value the business and know the real worth of the business. Bear in mind that when it comes to valuation of business, the value of a business, it doesn't necessarily mean the cash that you are having. It can cut across with the assets, that is the vehicles, the computers, everything, or the lands and buildings you are having. It can come with the goodwill, the good name in which your business is carrying. We all here can testify to the fact that some people are there, when they are running business, they put their integrity on the line, and they make sure they deliver and deliver to the highest. So those are some of the evaluation they will do to know the value of the money. And from the value, you then make a pricing, and from the pricing, you invite people to come in and buy the share of your company. So when they actually buy, they subscribe, you go through the process, they put your business out there, and your business will then be at the stock exchange market. The stock exchange market. So we here, I don't know whether I'm making sense, but if I'm making sense, I think we should continue. So if we here, we assume that we are investors. So now, how do we invest in these businesses? So the first way of just investing is the IPO. So let's say you've never been an investor, but your friend is having a business where she's listing it in, or she's having a company where she's listing it to the to that of the stock exchange, and you believe that I truly believe in Zulaiha's capabilities, that she can manage a company and manage it very well. You can buy some percentage of the company. And how are you going to buy it? You buy the IPOs. Let's say you can buy 5% shares of that particular company, and when she's later transferred to that of the stock exchange, you are indirectly a shareholder in that particular company with where Zulaiha is having. And the second way is for you to exercise patience and wait. When the business comes on the platform where we already have some businesses, then you invest in the business, or better still, you take a look at the other businesses that are already in the platform. Look at certain metrics around the businesses, and if the business is good for you and you believe that you can invest in this business, then you put in your money and invest in it, as simple as ABCD. I don't know whether we get what I'm trying to say. So if you are here and you've not understand everything that I'm trying to say, I'm just saying that the stock that we are talking about is not any other thing but a stake in somebody's company. It's a piece in somebody's company. Somebody is having a company, then you believe that, okay, this particular company this person is having, I believe in it, or within 5 years the company will do very well. It will have a steady growth and it will grow exponential. So I believe in this particular business. You can catch the business at the introductory aspect of the business. you can catch it in that of the latter part or any part, as far as you are going to make profit in it. So it's just like, let's take it like a pie. Like we've all gone to buy shawarma, we've all gone to buy pizza, we here, and at the end of the day, we've all taken bites out of the business, out of the pizza. Every bite we all are holding is a stock. So a stock is just a piece of somebody company where you are holding, and at the end of the day, you benefit from that particular piece of company you are holding. As simple as ABCD. So let's now get the latter aspect of investing in a share, a stock. Let's get the latter aspect of investing in a stock. So we those investing, if you now buy that particular piece of that particular company, you are called a shareholder. If you are here, you've often hear shareholders, shareholders, shareholders. Maybe you can hear it from business news, you can hear it from that of movies that you've watched, or maybe through your day-to-day interactions with people. You may hear shareholders. Shareholders are just basically people who own pieces of other people companies. Those are the people we call shareholders. And the basic way in which we benefit if you own pieces of somebody company, there are two ways. You can listen careful. There are two ways in which you can benefit from somebody's company. The first way is capital gains or share growth. So let's assume that you've seen this business and you believe in the potential. You buy the share of the company at 2 Ghana cedis. Let's take note, at 2 Ghana cedis. And later on, the company has been able to perform very well, and the share price has moved from that of 2 Ghana cedis to that of 5 Ghana cedis. Indirectly, your share has grown. We call it capital gain. Capital gain. That is the first way in which you can make money from investing in somebody's business. And the second way you can invest in somebody's, or you can gain from investing in somebody's company, is through dividend. And dividend is simply like the reward they give to shareholders. So there are some companies that pay part of the profit they make at the end of the year to that of their shareholders. So if they make 10,000 Ghana cedis as profit, I'm using these numbers because I want us to understand. But when it comes to the real world, or when it comes to proper businesses, a company in the stock exchange will not make 10,000 Ghana cedis as profit. I don't know whether you are getting it. So let's say you're making 10,000 Ghana cedis as profit, and at the end of the day, the company may decide that, okay, let's reinvest 80% of our profits back into the business and give 20% to our shareholders for trusting in our business. That particular 20% they are giving to the shareholders, we call it dividend payment. Dividend payment, you can note that one too. So if you invest in something and at the end of the day they pay you something, we call it dividend. And most stocks, they pay dividend at the end of the year. Maybe at the end of the year, once you're having a stock with a company, some stocks, not every stock, because some stocks, some business or some management prefer that when they make profit, they should invest 100% of the profit back to the business so that the value of the business will grow. Some believe that, okay, let's reward our shareholders for believing in us and believing in our company and trusting us with their money so that we can all benefit. So the 20% they pay to the shareholders, we call it dividend, and it can be done mostly it's yearly, but some companies are there, they pay monthly. So especially companies in the United States, they pay dividends monthly. Some pay quarterly, that is 3 months, and some pay annually. Some also pay half a year, that is like first half of the year they will pay, second half. A typical example of that payment is MTN Ghana. MTN Ghana mostly pay first half, they will pay dividends, second half they also pay dividends. If you take a look at the Ghana Stock Exchange market, we have 33 companies listed in there. Ghana Stock Exchange market, currently we have 33, even though this year we've seen some companies also making IPOs. Very soon they'll be listed and the number will increase. I think so far 2 companies have been have make an IPO, and Casapreco is also coming. So I think that will be 3. And in case there are other companies that are coming, at the end of the day, the number will increase. So that is it. That is just the basic concept of how you can benefit from that of investing in stock. You can either invest uh, and you gain capital gains. That is, you've invested 2 cedis and later the 2 cedis has moved to 5 cedis or even 10 cedis. You've made capital gain. The second way is for you to wait and you benefit at the end of the day. But some companies can reward you with these two. Example is MTN. MTN, the share price may grow and they will even pay you dividends. Total, the share price may grow and they will even pay you dividends. GCB, even though this year they've not paid, but over the years they've been paying dividends. This year they've announced that they were going to pay, I think, 3 Ghana cedis per share to their shareholders. But later, Bank of Ghana, they had an issue because they gave out loan that they wasn't supposed to give. They gave out some amount of money to one particular borrower where they wasn't supposed to give. So with that particular thing, it denied their shareholders, but it eventually increased the value of the share. Maybe they might even add it up if later that particular issue is resolved. So you may earn share growth. Let's say you buy share and at the end of the day, the share price increase and you benefit. And you may also, at the end of the day, benefit from that particular dividend the company is offering. I usually use some data to give out some this thing, but let me share my screen so that I can go to the Ghana Stock Exchange website so that we understand what I'm trying to say when it comes to share growth. So I will share my screen, then visit Ghana Stock Exchange market. Please, if you can see me, kindly unmute your mic and tell me so that I will know that I'm sharing my screen.
Yeah, we can see it.
Alright. Alright, so please mute your mic. Okay. So if you visit the Ghana Stock Exchange market, if you don't know about this platform, you can just go to your web browser. Please mute your mic. You can go to the web browser, type in GSE or Ghana Stock Exchange market. It will come. You go in there, you visit the website, and when you come, go to data, and when it comes, go to trading and data. So you click on it. So once it loads, quickly scroll down. You see the market data, the prices of the opening price of the companies. These are the companies that are listed in the Ghana Stock Exchange market. If you are following, we have Access Bank, we have ADB Bank, we have AGA, we have AWL, Anglo Gold Ashanti. There are many. Benzo Oil Plantation, Carl Bank, ACAL. Those are their abbreviations. Clystone Ghana. There's Farmer. There are many. So what I want us to understand is that I want us to look at some of the prices, how it has been able to move within 2025. So I'll sort out this particular data. Let's look at 2025. I'm clicking on 2025 if you are watching me. So I'll go to January. So if you are following, if you are using laptop or even phone, you can also do that. Go to January and click on January. This year, I think the market data started from 2nd January because every year 1st January is a holiday, and the stock market also works just like any other 9 to 5. It works Monday to Friday. So you can click on that of 2nd January, and when you click on 2nd January, the data on 2nd January will come. So let's sort it out from 2nd January to that of, let's say, 3rd January. So you can see from, and you can see 2. So the 2, do it to 3rd January. So if you take a look at the companies here, I want us to take note of something. Oh yeah, Allah. We are just going to highlight some number of companies here. Then I'll show you what I'm talking about when I'm talking of capital gains. So let's take a look at Goel. I think Goel is a popular company. So if you are holding a pen, you can write. But if you are not holding a pen, just watch through. Goel, at the beginning of the year, if you look at the year, you see that at the beginning, Goel was trading at 1.2 Ghana cedis. 1.52 Ghana cedis. Let's go to GCB Bank. GCB is also one of the popular companies that we had. Ghana Commercial Bank. I think everybody here in your hometown, you are having Ghana Commercial Bank. Me, where I'm coming from a village. Sorry, not a village. If my hometown people are here, like I'm coming from a town, and in my town, the only commercial bank we are having is Ghana Commercial Bank. I'm sure it happens to a lot of people. So Ghana Commercial Bank, GCB, at the beginning of the year, they were trading at 6 cedis 37. I don't know whether you guys are following, because I cannot see the screen, the Google screen again. I can only see the Ghana website screen. So at the beginning of the year, they were also trading at 6 cedis 37 pesos. Maybe we can look at 5 companies. Let's see this. ETI is Ecobank Transnational Incorporation. ETI. I'm mixing it up. Some of the companies, some of you, this is the first time you are hearing it. ETI is Ecobank Transnational Incorporation. And at the beginning of the year, they were also trading at 0.31 pesos. If you take a look at FML is Farm Milk Limited. I think each of us here, we've taken yogurt before, or we've taken farm milk or farm yogurt, any of these particular products. This is a company that produce. Oh, Charlie, I beg you, mute your mic. Thank you. FML, that is Farm Milk Limited. At the beginning of the year, they were also trading at 3 cedis. If you are following, this is the data I'm talking about. They were trading at 3 cedis 70 pesos, right? Let me get one last company so that we can continue or we can move on. There's this particular company that made a massive move. SIC made a massive move. Let me sort. Where's SIC?
37. Go 37.
I should go.
25.
Okay, let me increase the number. Okay, SIC. SIC at the beginning of the year was trading around 0.27 pesos. SIC is State Insurance Company. This particular company is also an insurance company. Last one. Okay, there's one particular company that made a move or a gain of 1,433% within this year, and that is Gladstone Ghana Limited. This particular company. So I want us to take the data and we'll take a look at how it has been able to grow. And mind you, growth in the Ghana Stock Exchange market is usually seen not only on prices but on percentages too. So this is the beginning of the year. If we are all following the beginning of the year, the data, and currently today is what date? Today is 27th, right? Or 28th? 2025 December 25th. No, Charlie. Hey, I don't even know today's date.
Today is 27th.
Thank you.
27th.
All right, so 27th. Sorry, today is Saturday. So the market closed on 20, let's put
22nd.
20. There was holiday, that was two days ago. So
And
when was the last
the
trading? I think Wednesday was the last trading day, right?
that would have been 24th.
So 24th. Like I explained earlier on, the stock market also, it also move like the way we go to our normal 9 to 5 work. We go to we do 9 hours in a day, 5 days in a week. But if there's holiday, it affects the stock market. So 24th, if you were writing, you realize that I made mention of gold. Gold at the beginning of the year, I said they were trading at 1 cedis 52 pesos. If we are taking notes, so we are looking at the current price of gold. You realize that gold, the current price is 2 cedis 95 pesos. 2 cedis 95 pesos. I also made mention of Ghana Commercial Bank. So 24th, where's GCB? You realize that I mentioned the price at the beginning of the year. It was trading at 6 cedis 37 pesos. This is the beginning of the year price, and the current price of GCB is 20 Ghana cedis 0.1 pesos. I don't know whether you guys are following. Ecobank Transnational Incorporation, ETI, other is also known as ETI, Ecobank Transnational Corporation. This particular company is a multinational company. It's present in 32 African states, and they are having their share listed in most of these African countries, and Ghana too is one of the countries in which they are listed in. ETI, Ecobank Transnational Corporation. At the beginning of the year, I made mention that it was trading at 3 cedis 0.31 pesos. 0.31 pesos. This is it. And current market price of it is 1 Ghana cedis. I don't know whether you guys are following. I want us to make some comparison and look at if we would have invested some amount of money, how much we would have been able to make. Maybe time, for the sake of time, I may just brush through it so that, but I just want us to understand the revenue or the technical aspect, the other aspect of investing in shares, how you can benefit from investing in shares. I also made mention of Farm Milk Ghana, Farm Milk Limited. At the beginning of the year, they were trading at what is the name? 3 cedis, 3 cedis 70 pesos. Where is it? 3 cedis 70 pesos. And currently, Farm Milk is trading at 8 cedis 01 pesos. If you take a look at SIC, State Insurance Company, where is it? Okay. Please, please, if you see SIC, just inform me. Okay. At the beginning of the year, they were trading at 0.27, and currently it's trading at 1 cedis 20 pesos. I don't know whether you are getting what I'm trying to say. Clydestone Ghana Limited. Clydestone, where is it? Clydestone. Okay. Currently, they are trading at 0.46 pesos. 0.46 pesos. So let's analyze the market data and see. I'm coming back to the screen. All right. Thank you. So please. Hello. Okay. Um, so go. Like I said, when we talk about capital gains, is when you invest some amount of money, and at the end of the day, the money increase, right? So go, like I said at the beginning of the year, the money was how much? 1 cedis 52 pesos, and currently the the stock is trading at 2.95 pesos. Please, can someone do the basic calculation and give me the differences? If you had you invested 1.52 and now the stock is trading at 2 cedis 95 pesos, what is the difference? Please quickly so that we can move on and we'll end the session.
I didn't get the figures.
Please come again.
I'm saying if 2 cedis 95 pesos minus 1 cedis 52 pesos, you invested in a company with 1 cedis 52 pesos, and the company has been able to move from 1 cedis 52 pesos to 2 cedis 95 pesos. So what will be the differences?
1.43.
1.43
Okay.
will be the difference.
All right, thank you very much. So that will be, you see, the difference is what we call the capital gain. The difference between the money you invested and the money it has increased to is the capital gain. So I want us to make an illustration. So let's say at the beginning of the year, we all here, by the grace of God, we had 10,000 Ghana cedis in our account, and we invested in that of God, and we made 1.43 increment. I want us to take this 1.43 and multiply it by that of our 10,000 Ghana cedis and see how much we would have been able to make as profit. Please, if somebody has calculated, you can just tell me.
14,300.
14,300.
Wait,
Thank
sure.
you. So the 14,300 would have been your profit just by investing from January to that of December. You would have made 14,300 free money. You are not working actively on it. You are not doing giddy giddy. And this particular money that you've made is what we call passive income. A money that you've been able to generate from other places, and you've used your 20%, then you've put that 20% into the stock market, and that particular stock has been able to generate you 14,300. With that particular one, we call it the capital gain, and in that particular gain you've made passive income because you are not actively working on it. So as you are working on your 9 to 5, or you are having a business, you are working on it and you are putting part of your money down, it's also bringing something to you, and that particular money is what you are getting from God. So let's see GCB. Please, let's make a quick move so that we can calculate and see. GCB from the beginning was trading at 6 cedis 37 pesos, and currently GCB is trading at 20 cedis 10 pesos. So please make the difference and we see the difference between 20 cedis 10 pesos from that of 6 cedis 37 pesos. Please, if you are done, you can
That's
give me the figure.
13 cedis, 73 pesos.
Okay, so 14 cedis 13 cedis 73 pesos. So if like we multiply this amount by our 10,000 Ghana cedis, how much are we going to make at the end of the year?
13,007.
Please come again.
137,000.
137,000.
Mm.
137,300. Right?
Yes.
Okay, so that particular money would have also been that of your capital gain, investing in that of GCB. I don't know whether we are getting what I'm trying to say.
Hello?
Yes, the point is well made.
Okay, so please, you can also, the rest of the data, I think I've stated about 4 other companies in here. You can also do the calculation and see the capital gain that these other 4 companies has also made from that of January to now. Maybe after this class or even within the class, you can also get to see how the capital gain is made. So this is just a scenario of what I'm talking about. That is the capital gain, and that is just how uh, wealth is being made when it comes to investing in the stock market. And one of the idea or one of the reasons people also believe in that of investing in stock is that, you see, Stock is a physical business. It's being run by people. There's no person in this earth who wants to be called an incompetent person, especially when you are being handed some resources to. So they, at every point in time, they want to move the company from point A to point B. So you see this particular stock price, even though it may fluctuate, the stock price may come from 20 to maybe 18 or maybe 19, but at some point it will go back from the 20 to 30. So at every point in time, the value of the company will keep increasing. I don't know whether we are getting what I'm trying to say. So you see, when it comes to investing in stock, that is just the rationale. Even though there are some points in time that, okay, there's some one crow bad human being, maybe some person with some bad idea or some bad perception about finances. Somebody is there, let's say most of these public companies or public government, where these companies where government is having massive share in it, they are having like a percentages, and at the end of the day, there are those appointing MDs or there are those appointing the CEOs. You realize that somebody is there politically is motivated to come and steal just because he's having election to contest, or he wants to go for a member of parliament in his constituency. So those people, there are some peculiar cases in which the stock may not do well because it has fallen into an incompetent hand or a greedy person, somebody who want to crook the company. So with that, that is when the company may not perform well. I don't know whether we are getting what I'm trying to say. So the basic idea about it is that you put your money in some company, and when the company grows, you also benefit, and the company may also reward you by paying share what is the name, dividends to their shareholders. So now let's come into the other aspect of it. Now we've realized that you can benefit from a company. Is it every company that you can put your money into? You need to ask yourself, no. If like we're having time, I would have go through the data. You realize that some companies throughout the year didn't perform. Maybe they begin the year with 1 cedi, and the close of the year the company is still 1 cedi. Some companies are there, they begin the year with 1 cedi, and at the end of the year, instead of moving forward, they've rather come back to 80 pesos. So they've made losses. So what are the things that you need to know before you invest in a company? That is a question you must ask yourself. Before you invest in a company, there are some things that need to move you. I don't know. Please give me 1 minute. Let me drink water and come. All right. So you need to ask yourself, what will you see in a company before you invest in a company? So theoretically, there are some three things that we usually look at when you are investing in a company. Firstly is the brand of the company. The brand of the company. Second is the management of the company. And the third is the finances of the company. And all these are very important when it comes to investing. One of them, when lacking, may shake the company, and one of them, when strengthening, may strengthen the company. So let me make an example. If you take a look at the telecommunication network in Ghana, you realize that the brand of MTN has stood out, not because their services are excellent, but if you take a look at the three telecommunication networks we have in Ghana, if we are all honest here, you will tell me that MTN has stand out among them, right? Yes, so that is the brand. MTN has been able to distinguish themselves when it comes to the telecommunication network in Ghana. And even if you take a look at the Ghana Stock Exchange market, they are the only company which is a telecommunication network, and they are listed in the Ghana Stock Exchange market. So their brand is very solid, comparing it to that of other companies when it comes to the Ghana Stock Exchange market. The second thing that you can also look at is also the management of the company. Like I said, so if somebody has a bad track record, let's say currently allegedly, somebody shouldn't sue him. We've seen Edubwain where they are dragging him around. We've also seen Abdul Hanan, the Buffer Stock CEO. They are dragging him around simply because these particular people, they trusted them with companies or they trusted them with institutions, and at the end of the day, they were able to squander some money. According to our Attorney General, they crook some money from that of the company. So let's assume that Enoch, you are a an investor, and you are coming to invest in a share, and you've seen these people as CEOs of companies. Honestly, your mindset, you wouldn't even want to even invest in that particular company simply because of that particular person, the person that you've seen, because the person, he doesn't have good track record. When they entrusted some particular company to him, he failed. Like, so you wouldn't want to invest your money in that particular company. So that is the management that we are talking about, or sometimes the board of the management. There are some people in the board of management that, Charlie, for them, they are politically motivated, or sometimes them, they are motivated one way or the other to take shady deals. So when you also see that those are red flags in a company, you shouldn't invest in that company, because those people, they cannot be trusted. But let's say somebody like Elon Musk, or let's say somebody like Jeff Bezos, or these top guys who have solid management team, which have solid management skills. They've been able to move companies from 0 to 100. When you see them as part of management teams, you know that, okay, these people, they are doing very well. Let's take it technically from what we are seeing so far. We've seen that Tema Oil Refinery, over the last 7 years, that company, it wasn't doing well. When several people came, for them, what they were motivated to do was to eat to their satisfaction. They will come, the resources, they are eating oil money. They will make sure their families are satisfied, everybody is satisfied. They are not concentrated on making the firm very well. But today we've seen Edmond Combat, the recent MD of that particular company. Within 8 months, when they appointed him as MD, he has been able to turn the fortunes around. From where the company was going to be sold at $21 million, today the company is being valued more than, or they're making profit within that particular short period, more than $21 million. Those are the management skills that we look at. So somebody like Edmond Combat, when you later see him in one particular company, like, you'll be motivated because you believe that he can do something for that particular company. His track record is very solid. I'm not political here, sorry. This is just illustrations that I'm making. If maybe it hurts you one way or the other because of your political party, I'm sorry. But these are the realistic things we need to talk about. So those are the things that I'm talking. So the management is also important. So Matthew, please mute your mic for me.
Okay.
So first, you need to look at that of the brand. Second, you need to look at that of the management team. And the last one is also the finances of the company. And the finances of the company is very important when you are investing in a company. Nobody will want to invest in a company that is not doing well. If uh, you take a look at the finances of the company, in the last 3 years, the company has been making losses. Ideally, you will not want to invest in it simply because the company has a track record of not performing. So if you take a look at the profit, the profit and loss of that particular company, or you take a look at the financial statement, and they've not been performing, like, it should give you some concept or some ideas that this particular company is not worthy of investing in it. So if you take a look at the finances, every company, especially a public company, they are required by law to publish their financial statement each and every year. So every year, if the company either make a loss or they make a profit, they'll put it out there in the Ghana Stock Exchange market, or they will put it out there in their website for people to know whether the company has performed or they've not performed. So what you need to do is for you to take the company financial statement. As a beginner, you don't have to worry yourself with plenty reading, because financial statement or corporate reporting sometimes comes with a lot of pages. So just take a look at the financial statement or the report that they've made, and you see somewhere that they've highlighted the profit they've made in that particular year, they may come and tell you that okay, they've made a profit of 5 billion, or you just know that they've made a profit. But if you are curious and you want to learn more, you can go into the numbers to see where they were able to generate enough income and where they were able to cut off expenses, or where they were able to, that is onto you. But as a beginner, if you are coming up, maybe you don't have much understanding, especially when it comes to finances, you may want to just look at these particular things that I've spoken about. Go to the profit, take a look at, and there's a snapshot of these particular things, especially the profit. You can look at the profit, that is one. You can also come and look at the assets and liabilities. When we talk about assets and liabilities, assets simply means the resources of the company. Liabilities are that of the monies in which the company is owing. So if they take a debt from a bank, that is a liability. If they buy stock or goods from their supplier and they are not able to pay, that is a liability. So you also need to look at assets and liability to know, is the company resources more than that of the money they are owing? So if, please kindly write these points down because they are very important. If at the end of the day, the resources of the company is more than that of the money they are owing, fair enough, it should tell you that, or it should ring a bell that the company is doing well. But if that of their liabilities is not, let me say, is much bigger than that of their assets, it should ring a bell that the company is not also doing well. Because let's say their liabilities are more than their assets, and at the end of the day something comes up and their debtors are on them, they want to take the money. Meaning if they take the money, they will sell all their assets to pay their debtors, and at the end of the day the company may be left with nothing, or they may even go bankrupt, or they may even fold up. I don't know whether you are getting what I'm trying to say. So what you need to look at is first the profit and loss, and second, you also need to look at the assets and the liabilities of the company. You may also care to know the track record, the dividend track record of that particular company. We call it earning per share, or earning per share. You can look at the earning per share. Okay, so far every time, how much do shareholders earn on each and every stock that they invest in? That is the earning per share. So you can look at it, and if it's favorable, earning per share at every point in time, the company earning per share is, let's say, above 1, that is fine, and you can look at how things are going. You can, if you also want to invest, you can look at the 52 weeks low and look at the 52 weeks high to know how deep the stock has been going. So 52 weeks ago, how was the stock performing? Is it that the stock keep declining for continuously 52 weeks, or the stock in the past 52 weeks has been doing very well? So these are some of the things that you can have a look at when you are investing, or when you are coming to assess the finances of a company. So basically, even though there are more as time goes on, if you are open up and you are learning, you understand more and more. Like I said, knowledge is the only way you can bridge the gap from that of where you are and where you want to get to. This class is to let you understand everything, but it doesn't give you everything, because even me myself, as I'm here, I'm still learning day in day out. I learn new concepts, I learn new things, and I learn new strategies in order to also benefit from that of whatever that I'm doing. I don't know whether we are getting what I'm trying to say. So if you are investing in a company, the three things you must look at it: the brand management and the finances of the company. So let's take questions then. I will give us one strategy that we can use to invest, or we can apply in our investment.
Okay, Mr. Hamza, this one I'm breaking the rules, please. I would suggest, since the time is far gone, let's continue. So if anybody has a person can write it down after everything, a question. I'm suggesting that we should continue with the ETF. That's my.
All right, thank you. So let's just wrap it up with that of the ETF. But for the sake of the strategy. When it comes to investing in that of stocks, whenever you are investing, there's one thing that we say: you cannot time the market. You don't know when the market will exactly move unless you're having an insider information. So one best strategy for beginners is dollar cost per average investing. And the dollar cost per average investing is for you to highlight and know yourself that, okay, um, I'm somebody who earns this amount of money and I want to be putting 10% of my money in stocks. That is fine. So at every point, let's say at every month, whether the stock price is 1 cedis, you are putting, let's say, 1,000 Ghana cedis in it. Whether the stock price is 1 cedis 20 pesos, you are putting 1,000 Ghana cedis in it. Whether the stock price has come back from 1 cedis to 80 pesos, you are putting 1,000 Ghana cedis in it. And that particular dollar cost per average is only applicable on stocks that you've reviewed after going through all these processes that we've spoken about. You've gone through all this and you've highlighted that this particular company is a great company. Over time, there's value in this particular company. The father of value investors is Abraham Graham. You can take a look at his book. He's having one particular book, The Intelligent Investor. The Intelligent Investor. After here, you can also take a glance at the book. You can read more on value investing. He believes that whenever you highlight a company that is time value, that is a company that can last for the test of time. Because you see, there are some companies that the services they are providing or the products they are selling, it will last forever. Like it will take a very long time. So if you highlight that and the price of the company is not that extreme, you can get in as soon as possible. Then you apply this particular way of investing, because over time they provide value at every point in time, so you benefit from that particular investing. So Benjamin Graham said, if you highlight, let's say, MTN Ghana like this, we've seen that the competition, even though currently MTN Ghana, if you take a look at their measure and apply it, or you compare it to that of other companies, it's doing very well. It's very solid. With that, there's no high competition in it, and even over time, I'm not sure MTN Ghana will not want to do their services better. At every point in time, they want to keep improving because they need to serve their customers best, because there are investors behind it and they will not want to slack. So with that, you realize that MTN Ghana is a good stock and you want to maybe put your money in for let's say a 10-year period or 15-year period or 5 years period. With that, you can apply this particular dollar cost per average that I'm just talking about. And like I said, learning is something that is continuous something. So dollar cost per average, after here, if you still want to learn more, you can go to maybe YouTube or you can go to Udemy. Just type in dollar cost per average, it will come, then you learn about it very well. I don't know whether you get what I'm trying to say. So this is one strategy that beginners can use in investing, even though there are other strategies. But the beginners, you can stick to this, because when it comes to other strategies, I may say you can apply technicals. Technical analysis is, okay, at every point in time, the company doesn't move in a straight line. It consolidates. For those of us here who are forex traders or who are crypto traders, we understand what I'm talking about. Consolidation, like it can move to 1 cedis and it will come back to 80 pesos. From 80 pesos, it can go to 1 cedis, 50 pesos, and it will come back. So there can be a point where there's a support area. So you realize that when the price goes, it comes back and it goes again, it comes to that particular support. So when it comes to the support, you realize that this is an entry point for me. So you can wait for it, then you invest in at that particular point, that particular support area, and it will keep moving. So that is another strategy. Each and every person and where they've gotten to. So if you are a beginner and you just want to start, I would recommend that you go by the dollar cost per average, because you cannot time the market. As a beginner, you cannot time to know the exact time that it will come back to that of the support area that I'm talking about. But people who are already into it, let me say somebody like me, I'm not only investing in stocks. Aside stocks, I trade that of forex, so I understand everything when it comes to support area. So I may analyze a stock and I know where the support area is. So if the stock is coming back to a support area, I may wait for it to come to the support area. But you may not know when it will come back to the support area for you to get in. So those are the things that I'm talking about when I'm saying there are other strategies. So let's conclude it with that of an ETF. So ETF is also exchange traded funds, exchange traded fund. An exchange traded fund is just like a basket of stock. So here, instead of investing in only one stock, let's say you are investing in Google, or you are investing in that of Microsoft, or you are investing in Nvidia, or you are investing in any other stock, just one. Here you are investing in a collection of stock. An ETF is like a basket, let's say a salad. We all know that when it comes to salad, it's a mixture of various fruits. They come together for it to be called a salad. It's the same knowledge applies to that of ETF. So we can have an ETF where the ETF is based or is an investment on that of what is the name? Technological companies. So let's say Nvidia can be there, Microsoft can be there, Apple can be there, like all these particular technological companies. It can come up to be called an ETF. And at the end of the day, you invest in that particular company. Or let's say Nasdaq 100, the top 100 companies in the US stock exchange market. That is also an ETF. Or we have something we call QQQ. We have something we call VOO. Like those are some of the ETFs. So if you want to invest in ETF, you can actually take a look at the type of investment ETF you want to invest in. We have real estate ETFs. There are stocks who are into real estate listed in a stock exchange market. And we have stocks which are listed as gold companies. That those, let's say if they bring those companies together, we call it gold ETF. So let's say there are 3, 4, 5, 6, 7, 8, 9 companies who are into gold. So those companies, when they come together, we call it gold ETFs. And there are some companies that are, let's say, technological wise, technological companies. For them, they are into technology. Those are what we call like technological ETFs. I don't know whether you get what I'm trying to say. And in ETFs, it can also be measured in terms of bonds. Let's say bonds like government bonds, like anything lending that is more than 1 year. So there are some ETFs that deals with bonds. So they organize all the bonds, and at the end of the day, they call it an ETF, a bond ETF. So each and every ETF and what they are into. So you need to know the rationale behind it, or maybe in the last 365 days, which companies perform very well. So like something like Nasdaq 100, like the top 100 companies in the US stock exchange. Okay, in the last 365 days, these are the top 100 companies that are performing. So we are investing in it. So those companies is what we also call is also called ETF. And these particular ETFs are being managed by some group of people, or is being managed by ETF managers. And at the end of the day, what you just need to pay is the management fee. So if we take a look at, somebody may ask, what is the difference between that of ETF and that of stock? The first example is just what I said. If you take a look at ETF and if you take a look at stock, stock is just one company. ETF are a group of companies or many companies. And the second difference is that when you take a look at the earnings or the performances of that of a stock is rational to only that particular company. So if you put your 1,000 Ghana cedis in that of, let's say, Google, and Google in the last 165 days or 365 days is not performing, meaning your money is stagnant. I don't know whether we are getting what I'm trying to say. Or let's say you buy the Ghana stocks that we are having. You buy GCB Bank, and at the end of the day, GCB didn't move throughout the year. Your 10,000 will be 10,000. But if you invest in that of ETF, at the end of the day, in the top 100 or the companies that you've invested in, at least some companies out of, let's say, if you invest in an ETF where there are 20 companies, let's say at least in the 20 companies, 5 of them or 10 of them will perform like very well. Let's say more than 100% or it will give you 200% returns throughout that particular year. And there are companies in the ETF that are there, they may not also perform very well like that, maybe some 50, 60, 70%. And there are some companies that will also make losses. So with that, those that has made enough gains, it will balance that of those that didn't make enough gains or those that didn't make losses. So relatively, if you take a look at ETF, you realize that it's something that gives you better returns than, or better guarantee that you make returns than that of if you invest in that of a stock. Because at the end of the day, a company is still a company. It's managed by human beings. Anything can go wrong. And at the end of the day, anything can happen. And ETF is a group of companies. If one is not doing well, one may be doing well. And that particular thing, we call it diversification. And even if you are investing in the stock market, you need to diversify. Don't invest in only one stock. At least highlight some good stocks, then invest in those stocks. So those are just some of the differences. And another difference is that if you want to invest in ETF, the fee are relatively low than or lower than that of if you are investing in a stock. I don't know whether you are getting it. So, but the rationale behind ETF and stock are just the same thing. ETFs and stocks is more or less like the same, but these are just some of the difference. Because if you take a look at it, ETFs are group of companies, stock is just one, and ETF, the management, you need to sort the management with managerial fees, and at the end of the day, there's diversification in ETF, and in stock, you are just pledging your money to one particular stock. But you also need to know that an ETF may also drastically, when there's what is the name, when stock market crash, your ETF may not also perform. But over time, we've realized that the top 100 companies has been yielding some results. So if you take a look at the Western world, for them, they see ETFs as something that brings that are guarantee or a guaranteed return. So somebody at the age of 20 may start investing in an ETF till he becomes 50, and with that, he may even turn his $20,000 to that of a millions of dollars. And the secret behind that is compounding, a secret of compounding effect. So the more your money compound and something add to it, the more it grows up and the more it goes up. So that is just the ideal differences or the rationale behind ETF and that of a stock. So I think with this we can come in with some questions, then we'll just call it off, and if we have any further more questions or any other discussion, then we can discuss it in that of our WhatsApp page. Thank you very much. Please, let's take some few questions. I think 5 questions will be enough so that we can move on. So please, there are some hands up. Okay, Sina Benjamin, please come in with your question. Please, if you can hear me, unmute yourself and talk.
Oh, sorry. I thought I have unmuted myself. So I first thank you for the knowledge you've shared. I have a number of questions here. Number one is how do we do our own research when it comes to, because I've listened to some financial presentations just like what you've done here, and when they are getting to the end, they will tell you to do your own research. So how do you do your own research? And the second one is that what determines the rise and fall of stock prices or share prices? Like MTN Ghana, what determines the rise and fall of their share prices on the Ghana Stock Exchange? And the last question is, how do you get to start the ETF trading? How do you start it?
This one there, you bombarded us with questions. You've given us 3 questions at a go, but
Eh,
let's tackle it.
okay.
So when somebody tells you that you need to do your own research or you need to consult a financial advisor, they are indirectly telling you that they are disassociating themselves from any other consequences. In this world, nothing is guaranteed. At the end of the day, you can invest in something and the outcome may be positive or it may be negative. And in the Western world, for them, they don't joke with that of lawsuit. Godwin is here, is a law student. If something happens or something goes wrong, somebody can just apply or get Godwin as his counsel, and he will take charges against you, and at the end of the day, Charlie, you pay something. So financial advisors most of the time doesn't want to go through that particular hurdle. They may be giving you all the tips, but they will just still tell you that you need to do your own research or do your due diligence before you get in. But however, when somebody says do research, they are basically telling you that the things that we've pointed out earlier on, what you should see in a company before you invest in. You need to understand those things, like the management, the brand, the finances of the company. That is the research they are talking about. The research is basically getting the positives, things that you need to know before you invest in a company. That is just the basic research. And let's say there are also somebody is recommending a particular investment for you and is telling you that you should do your due diligence. Let's say if you go and invest, let's say if there are some beginners here who doesn't know the stock market, and for the first time I'm telling them that there is some stock that you can invest in, and at the end of the day you make a profit of 130,000 or 100 and something thousand, he may not believe because he feel like it's outrageous. So in order for you to disassociate yourself, they will just tell you that okay, do your due diligence. So if you go and check and the stock market is real and it's not a Ponzi scheme, you can invest in it. But the research they are basically telling you is you need to know that the investment you are going into is legit. And second, what are the positives, especially when it comes to stock, what you should know before you invest in that particular stock. And secondly, you also ask another question, which happens to be uh, how do we invest in an ETF? So in ETF, in our Ghana Stock Exchange market, we have only one particular ETF, and that is the GLD. Aside that, there's no ETF in Ghana. But however, in the US Stock Exchange, we have different ETFs. We have the VOO, we have Vanguard, we have QQQ, we have different gold ETFs are there. If you take a look at Bamboo, if you sign up with Bamboo, you see the ETFs in Bamboo. You can invest with them. Please, Sina Benjamin, mute yourself and unmute yourself and ask the last question. I didn't take note of it.
Okay, so the last question was about the determinants of the rise and fall of stock prices.
Okay. So if you take a look at the stock market, it doesn't move in a straight line. And in this world, or even in our day-to-day activities, you realize that there are some things or some commodities that the prices doesn't move in a straight line. It applies to the stock market, and it's as a result of demand and supply. So if there are high demand for one particular stock, indirectly the stock price will go up. And secondly, what also affect the price or the movement of price is the performances of the company. If the company announce that they are paying dividends today, a lot of people here, those of us here, will all rush in order to buy the stock of the company. And with that, the demand of the company has gone up and the price will increase. And on the other hand, if the company is not doing well, it affects it and it comes down, it consolidate back, or maybe there's a bad PR around the company. People are scared that they may lose their company, especially these United States companies, and they may remove their money or they may sell their shares. And as people are selling, supply is higher than demand, and the company price may also goes down. So it's basically demand and supply, which relatively goes to that of the performance of the company, PR. There are a lot of things when it comes to investing in stocks. So it can be PR, it can be demand and supply, it can also be the performance of the company or geopolitics. when it comes to nationwide, you realize that uh, like the entire world, we are linked to an economy. Even though Africa, our contribution to the world economy is just less than 5%, or is it 2%? But better still, it still affects us. Geopolitics. That is why Trump will announce that there's a tariff war between US and China. But everything that has to do with prices will be affected. I don't know whether we get it. So geopolitics also affect the performances or the movement of stock prices. So these are some of the variables that affects the movement of the downwards and the upwards movement of prices. Senior Benjamin, if your question is answered, you can give us a thumb so that we can move on.
Sure. I'm well satisfied. Thank you
All
very
right,
much.
welcome. Uh, Godwin, please ask your question. Cancel.
Okay, thank you very much, brother. Uh,
All
my question goes this way. I actually watched a video on TikTok,
right.
and the guy was talking about Ghanaian, and
Okay.
he emphasized that there is an issue that no one, especially the investors, are talking about. They said he emphasized that when you buy the Ghanaian stocks and you are ready to sell it back,
Mm.
especially on IC Wealth or something like that, you can make the transaction and it will be pending for months. And it has been a challenge, and it is as a result of the fact that currently, when it comes to the Ghanaian market, the competition is not really there, and it is still growing. So I don't know how true it is. People make all kinds of videos just for the comments, the likes, and the trends and stuff. So I really want clarification on that.
All right. So if we take a look at the Ghana Stock Exchange market, it's not yet there. Godwin, please mute your mic. It's not yet there like that, right? And the reason is that the players in the Ghana Stock Exchange market cannot be compared to that of the US Stock Exchange market. Because if you take a look at the US Stock Exchange market, internationally people invest in it, but Ghana, the liquidity, we call it liquidity and volatility. The volatility is the upward movement and downward movement of the stock price. So let's take a look at we here, assuming that we've all learned how to invest, and at the end of the day, you've noticed that what is the name? Ghana Commercial Bank is a good stock. Then you've been able to get like some 200 companies, 200 shares to buy, and after that movement, the company is doing very well and the stock price is moving. You may patiently wait to get the full benefit of it. I don't know whether you get what I'm trying to say. So if in case people are coming in to place an order to buy, you may not want to sell. And if you are not selling and somebody is not selling the stock, meaning there won't be volatility in the market. So if the guy is saying that okay, there's no volatility, he may be right one way or the other, but it's not entirely so that if you place an order, it will take a very long time. Sometimes it depends on the stock. Each and every company has the number of shares they've released to that particular they've released to the public. So if somebody, let's say a number of people are holding some companies, some stock, and they don't want to sell the stock, it's very difficult for them or for you as somebody who wants to buy to get into the market. I don't know whether you get what I'm trying to say. So volatility uh, is low, but it doesn't mean like you will not get and buy. But when it comes to US, let me say sometimes I've been buying US stocks. Sometimes too, there are some companies that you can also place an order. It will take like 1 day or 2 days. It will not get through. Sometimes there are some companies you place an order within the next minute, it will get through. And it's same thing applies to the Ghana Stock Exchange market. MTN like this, if you place an order within the next day, trust me, you get the order and buy. And if you place an order within the following day, you'll be able to sell your stock. So it depends on the stock that you are selling, and it depends on the stock you are buying. Some stocks are there, the volatility are low, and some stocks are there, the volatility are high. Because day in day out, as you are investing, somebody is there, the wife is pregnant and he wants money to go and do proper, he want to go and do, maybe attend to medical bills, or maybe the wife has delivered, he wants to do naming ceremony, so he will sell the shares. So it depends on that of the company you are investing in. But we still need more people in coming to the Ghana Stock Exchange market. That is the honest truth. But it also depends on that of the stock. So Godwin, thank you very much for the question. I think this throw much clarity to that of we those here. Please, Silas, please ask your question. After then, we'll come to Obed.
Thank you once again. My question is it advisable to buy shares in a company that has not been able to give dividends for over 2 years? Because if you check softwares like IC World, there are some stocks that if you check their dividend history for about the past 2 years, there is no dividend given to the shareholders. Thank you.
All right, thank you. But Godwin, I don't know if your question was clear. Let me know. But if you still want some clarity before I answer Silas' question. Godwin.
Yeah, please. My question was well answered. Thank you.
All right. So Silas, it's not true. Some companies are there, they are dividend paying stocks, and some companies are there, they are not dividend paying stocks. Some companies doesn't pay dividends. I think I illustrated that, or I made mention of that. Some companies are there, they reinvest all the profit they make back into the business for the business to grow, especially businesses that are not there yet. If they make 100% profit, they invest it back. But if a company also pay dividends, it's a good sign that the company is a good stock, or it's also a stock that you can invest in. But a company may still pay dividends and they will still struggle. You also need to understand that. So it's not entirely so. It depends on you, the investor. If you want to be receiving something like salary from that of investing in stock, let's say every month you receive dividends to help you finance your day-to-day activities or to reinvest back to different companies, you may want to choose investing in dividend stocks. But if that's the case, you don't also want to do that, you can invest in companies that are based on growth, and that is the capital gains. Thank you very much, Silas. Obed, please ask your question.
Okay, good evening.
Good evening.
Please, I am a newcomer in stock investment. I listened to you, so I decided to join to make a try,
Okay.
like try. So I invested in MTN, which I started with 210 CDs. So after everything, they gave me a day that my shares will be like I can withdraw my shares. So when the day it was less than 1 week. So when the time was up to date, I decided to sell my shares to get back my money. But even the amount of money I used to buy the shares, anytime I decided to sell the shares, I don't get back the money I bought with. The money has been reduced. I want to know
All
what
right.
do I do to reduce it. I don't know if you get.
All right, Obed. So it's either two things. Please mute yourself. It's
Sorry.
either Yes, it's either two things. It's either the price in which you bought the share, it didn't move upwards and you are trying to sell it back, or maybe it has moved downward. So let's say you bought the share at 1 cedi and it's still at 1 cedi and you are trying to sell it. If you sell it, the broker will take commission. So if they take commission and gives you back the rest, it will be up to the money that you've invested in that particular stock. So Obed, investing is a long-term game. If you know that you want to invest and 30 days time you remove your money, please go into mutual fund or invest in treasury bills. Those are the short-term investing that you can do. But if you want to benefit fully from stock, you should give yourself time when you are investing in the stock market. I don't know whether your question is well answered. But Silas, is your question well answered? And Obed too, is your question well answered?
Yeah, sure. I understood everything. Thank you,
Thank
sir.
welcome. Obed, all right. So I think let's take some last 2 or 3 questions, then we'll. But I forgot of something. I don't. I forgot to uh, talk about brokers. The relationship between the Ghana Stock Exchange market and brokers, and some of the brokers. So let's take 2 questions, then I will just address that for the sake of people who have never invested in the stock market or never bought some stock. James, please ask your question. James, please unmute your mic. I can't hear you. All right, James, if you are not there, Deborah, let's take your question. Deborah, it's like you are not also there. Abbas, Sina Abbas, ask your question.
All right, thank you for the opportunity once again. I think the network has been troubling me, but I
Sorry.
just wanted to find out, like as a newbie, someone who is coming new into the stock investment, probably you have to do your own research to understand some few things before you can probably go in. But looking at probably the time that you might also spend in the research might also take some time. So is there any way that like somewhere that you can just start with whilst doing the other research to understand more? I don't know whether you've gotten what I'm trying to say. Like whether there is a particular stock that you can venture in, then whilst doing the research, or somewhere that you can start your investment whilst doing the research to get a better understanding about the stock market. I don't know whether there's a possibility of something like that.
Okay. So Abbas, when we say research, it doesn't mean like you do research like for 1 week or 2 days or 5 days. Research can just take you like 1 hour, 2 hours. You are just basically looking into some details of it, or you can study the company, right? But if you feel like doing the research is going to be something that will worry you, and you know somebody who is also good at investing, you can ask the person for recommendations. What are the stocks that you feel like I should buy? And the person may recommend. But if the person is not a financial advisor, he may tell you that, okay, I'm not the liabilities of this particular advice, I'm not part of it. At the end of the day, what happens is your own risk. I don't know whether you get what I'm trying to say, but if you feel like okay, you can follow what the person has recommended, then you can go on and buy, because the person has done the research already, and you feel like these companies may do well in the next coming year or in the next 2 3 months. And one other way too is that maybe you can go to some uh, platforms. We have Watch IT. You can go there. It will tell you whether this stock is overvalued, undervalued, or fairly valued, or the potentials. Then you can also learn about it. Or better still, if you have money, you can hire a financial advisor, pay the person will manage your resources or your investment for you. So that is it. You can use 1 day or even some few hours, just look into a stock, understand the idea or the concept about the stock. You can do your research. When we talk of research, it doesn't necessarily mean that you are spending the whole day or the whole year or months into it. However, there are some people who uh, steady stocks. Like I said, you can know when the stock is coming to its support area, like I indicate earlier. But those are technical aspect of it. So if you don't understand the technicalities, you can look at the management, you can look at the brand, you can look at, and every stock that are listed, they have websites. You just go there, check the management of the company, and also their past financial books are released. And you doesn't need to be an accounting student before you can understand a financial statement. They have snapshots. Watch the snapshots. Is the company making profit? Are they making losses? And you look at their assets and liabilities like we discussed. Thank you. As simple as ABCD. Abbas, is it okay? Um, yes, Unilever is there. I think we've asked James. James is not there. Okay, Raymond. Let's take Raymond. Oh, Kojo too was there for a very long time. Kojo, please ask your question so that we'll come to Raymond. Then I'll talk about the
Okay.
brokers and how you can get the apps and invest, and further questions can be answered in the platform. Thank you.
All right. Okay. My question is about the IPO thing you talk about.
Okay.
I was watching TV and then I saw a First Atlantic Bank is being listed on the Ghana Stock Exchange. So
Yes.
quickly I checked the website, but I couldn't see them there. So my question is, how can one invest in it through the Ghana Stock Exchange platform?
All
And
right.
also, second one, you said that for the technical analysis, how do we do analysis on the Ghana stocks companies? Thank you.
All right. So, Kojo, the first question you asked, before a company is listed in the Ghana Stock Exchange market, it has to go through the IPOs, the initial public offer, so that the public will buy the shares before they can be listed. It's one of the requirements. So the time you check in the Ghana Stock Exchange market, meaning they are not yet listed, they cannot be traded in the Ghana Stock Exchange market until the IPOs is done. And that is why First Atlantic Bank, when they open their IPOs, they also give dates. If you want to be part of their shareholders or buy IPOs, you need to buy it from this time period to this particular time period. I don't know whether you get what I'm trying to say. So it's just the technicalities, like from uh, the IPOs to that of the transfer of IPOs to that of uh, the Ghana Stock Exchange market. So after the IPOs is done and they've actually meet the requirement, they'll put them on the stock exchange for them to be tradable. So any person can now buy and sell the stock in the Ghana Stock Exchange market. And also the technical analysis. Technical analysis is just you looking at the graph or looking at the candlestick movement of these companies in the Ghana Stock Exchange market. There are some websites that you can watch it, or you can take a look at it, or however you can also take a look at the prices. TradingView, if you have the premium, you can get these things. If you don't, you can go to Simple Watch ST. Then some platforms are there. You can just look at the technical movement, that is the candlestick. How is it buying, how is it selling? And if you still don't understand, I think recently IC2, they've updated their portal. You see some graph be there. So if you are using a laptop, maybe you can see it very well. You can also see that Bamboo too, they have what is the name, Blackstar, they have something like that. So TradingView may be best for you. You can go in there and check the candlestick movement. We call it candlesticks. That is the buying and selling. The graphical representation of it is the candlestick movement, and we call it, if you are able to analyze it well, you see that it's called the technical analysis. Let me show you that of gold, how gold is moving. So let me share my screen so that you can see how gold is moving. So if you take a look at this particular green, that is buying, and the red is selling. So that is just the candlestick, the graphical representation of that of gold. So if it's green, meaning it's buying. If it is red, it's selling.